What's going on, everybody? It's Stas here. So the market's teeter-tottering today. It's not doing much. The S&P 500's at break even. We have the Dow Jones down 0.3%. The NASDAQ 100's also at break even. And the Russell 2000 is down about 0.2%. So I want to break down some technicals today, go over some stocks to buy that I'm personally watching. And I also want to go over where my head is at overall as a trader, as an investor. Is the stock market about to dump? That is what I want to cover, so feel free to hit the like button, subscribe, get yourself into the Strive Smart Discord chat, get $30 from M1 Finance and 2 stocks from WeBull. All of those are free and linked down below. And you guys could also check out my Patreon for real-time buy and sell alerts, call-outs, morning update videos, and more access to me throughout the day. All of those are linked down below. So let's get into it. S&P 500 today hit a fresh, brand new all-time high at 4,086.23, and you guys can see clearly on the hourly chart we're still very overextended. The RSI hit, it actually peaked at almost 90. That was yesterday the RSI was at, and today, despite us pushing higher and hitting an all-time high, the RSI actually dove off a cliff. The RSI is still overbought, but it's much lower than where it was yesterday. Now it's at about 70, but still it is very overbought from what I'm personally seeing here. And going over to SPY, we can see, and this is an S&P 500 ETF for those of you guys that don't know, you can see we're also seeing a bit of a bearish divergence here. You can see we hit an all-time high at 407 on SPY today, and we're seeing the RSI taking a pretty big hit. The strength in that move is dropping down a bit. RSI is not nearly as overbought as the index itself. It's actually sitting at about 57 here on the hourly chart, but that bearish divergence is leading me to believe we might see a bit of a drop here. And where could SPY go to? And by no means am I saying the market's going to crash, guys, but I do think we're still overbought, and we're seeing some signs here that we're going to see a bit of a sell-off. Nothing too crazy, and I think SPY could end up going anywhere from 398 maybe on the lower end, right around this 180 moving average here on the hourly chart, to about 400, 402 on the higher end. That is what I would consider a pretty healthy pullback, and honestly, that's still not much. I mean, that'd be a drop of 2%, but that's fine. You know, that's fine. And from there, we'd probably end up, we'd probably continue the uptrend and maybe go and push for those highs again. And like I mentioned yesterday, Jerome Powell, the Federal Reserve minutes, Fed minutes, whatever you want to call it, that is tomorrow. I believe it's at 2 p.m. Eastern Standard Time, so watch out for that. That is going to be pretty important. So yeah, SPY could see a bit of a sell-off. Same with the S&P 500 index. Obviously, those two are correlated. And if we take a look at QQQ, this tracks the NASDAQ 100. This is also pretty overbought. We're seeing also a bearish divergence on this on the hourly chart. We can see we clearly broke out of 315, filled the gap to 325. Now we filled the gap to 330, 332, which you guys know we've been calling this out and talking about it here on the YouTube channel and on Patreon. And on the 4-hour chart, you can see a broader picture of how QQQ is super overbought. The RSI here is over 70, and a healthy spot I think it could get to in terms of a pullback would be anywhere from 325, 326 on the lower end, or rather the higher end, to about 318 on the lower end. That is where I think we could end up seeing a bit of a retracement to. And a way that you could trade this potential drop coming in QQQ here is SQQQ, also known as SQQQ, whatever you want to call it. This goes up whenever the QQQ is going down. In other words, you pretty much profit, you can make money as the markets go down. And one thing worth noting is this is an inverse ETF, obviously, and it's leveraged, right? So it goes up 3 times what the NASDAQ 100 goes down. So keep that in mind, and it's also not worth swing trading. You can see clearly if you swing traded this thing over any time period over the past 6 months, you would have lost money. So this is only a day trading tool, not a swing trading one. So So those are some thoughts on the markets. And on top of that, we have the VIX slowly creeping up. The VIX is the volatility index, also known as the fear gauge. This is at a low point in the past 6 months, and over the past year, it's still at a low point. And if you look on the 3-year chart, it's approaching levels we haven't been at since the beginning of 2020, end of 2019. So that is pretty interesting. And that doesn't necessarily mean volatility is going to spike up, but it could signal that pretty soon here we might see some choppiness or volatility kick up, at least based on the historical metrics, right? It looks like every time we've gotten to the teens here, we've seen a spike back up into the 20s, mid-20s, even the low 30s when it comes to the VIX. So keep that in mind. And again, guys, I'm not saying the market's going to crash, but in the very short term here, I am seeing initial signs of a potential pullback in the short term. And I'd love to know your thoughts on that down below in the comments. And let's talk about now some stocks that completely went crazy today. A couple of these did, and some other ones I'm watching very closely to add money to or add to my existing position. So number one, we have ROMO Power, guys, and this went absolutely berserk today, and it's continuing its massive run as the market is still going. I forgot to mention that we are about 30 minutes away from close right now, and this stock, guys, RMO, just when everybody thought, oh, it's a dead stock, it went to $39, dropped all the way to $7, this thing is toast. Just as everybody was throwing in the towel. The stock is up 70% today, up over $5 per share. And now that I'm looking at this, I should have bought in, man, at about $7, $8, $9 in these single-digit levels, because the risk-reward, as we're getting lower and lower, I mean, it's getting better and better, because a lot of people feel like, okay, the stock's going down, that's super bad, but as the stock price goes down, that's actually when the risk reward becomes more and more attractive. Unless the stock goes bankrupt, well, in that case, you're screwed. But with ROMO Power, I mean, I didn't think it was going to go bankrupt, so I should have bought money or should have bought some shares. But shoulda, woulda, coulda. You can't go back in time, whatever. Forget about it. And even at this point, there could still be potential, but I'm going to be careful with buying into this now that it's gone up 70% in a day. I'd probably wait a little bit and see what it ends up doing. And you might be asking yourself, why did this go up 70% in a day? Well, you guys can see the screenshots right here. ROMO Power Inc., an energy technology leader delivering large-scale electrification solutions for complex commercial applications, announced today a long-term supply agreement with PACCAR, ticker symbol PCAR, a global technology leader in the design, manufacture, and customer support of high-quality light, medium, and heavy-duty trucks under the Kenworth, Peterbilt, and DAF nameplates to provide battery packs, modules, and battery management systems, also known as BMS, for PACCAR's battery electric vehicles, also known as BEVs. And under the agreement, ROMO Power will be a battery supplier for Peterbilt 579 and 520 battery electric vehicles in the United States and Canada through 2025. The start of production is anticipated to begin after 2021. So this is a huge win for ROMO Power. PCAR on the flip side, which again is who they got into this deal with. I looked at that stock earlier, and mind you, I'm not familiar with the stock, I'll be completely honest, and it's not moving too much. I mean, really not at all. In fact, it's down on the day, down 1.2%, and obviously this agreement was a lot better for RMO as opposed to PCAR, hence why RMO's up almost double today, almost 70% on the day. So again, guys, I'm not rushing in to buy this quite yet. This is great news overall, but I'm going to wait and see if it cools off a bit. Maybe we fall back down to $10, $11, $12. Who knows? Maybe we go back to $9, which probably won't happen, granted, with this deal here. But anything could happen at the end of the day. And you can also notice notice here that we are at a point of resistance considering this 4-hour chart. We haven't broken out of this 180 moving average in a couple months. I mean, we are peaking out of it right now, but I'm not fully convinced that we are going to blow out and go back up to the low teens, or rather high teens, low 20s. I'm not too convinced yet. And for the next couple of days, I'm looking at this resistance point on RMO. So let me know your thoughts on that one down below. Shopify SHOP is another one that I'm watching here, and we've been analyzing this one a lot on the channel. Today it's up almost 2%, up $20 per share. Great day for Shopify, but it is still under a big resistance, guys. That resistance is right around, I think it's at 1160. Let's pull up this hourly chart so we can see. Actually, no, it's more like 1180. You guys can see we haven't broken out of that point pretty much since the beginning of March, or even before that, we were struggling at 1180. So at this point in the very short term on Shopify, I'm seeing an inverse head and shoulder. We have the left shoulder, the head, the right shoulder right here, and we're still pretty much in that consolidation phase of the right shoulder between 1140 and 1180 on the upper end, right? So we need to break 1175, 1180, and that is what I'm looking for. I mean, the second Shopify breaks that, and I'm going to set an alert at 1180, I think we're going to explode to 1250. That is the next big target on Shopify, and you can see based on my trend lines here, it's actually more like 1130. So anywhere from 1130 to about 1180, so that's about a 50-point window. That is where I think Shopify could be heading to over the next couple of weeks here, so I'm pretty excited about that one. Roku is another one that we got a big pop in today. Roku is up 10% on the day, and Evercore ISI has Roku at outperform. This firm, they actually rated them outperform, and they announced a price target of $400, and that's definitely the biggest catalyst today, moving Roku, and you guys can see it here on the live news tab, and you can see earlier, well, that doesn't really matter. I was going to say this right here. But anyway, Roku doing very well right now. And we're still under a pretty big downtrend, or we're in a downtrend still, guys, despite this 10% move today. And we're noticing we're breaking out of the 50 SMA. Okay, that's good here on the 4-hour chart, but we're still under the 180 SMA, which needs to break. And as we do, if we do break that, we're going to see a turn of events, or a turn of tide, whatever the heck saying that I've been using lately. We're going to see the tides turn at that point in time. And remember how we talked about a bearish divergence when it came down to the SPY ETF? In this case, with Roku, we're seeing a bullish divergence. We've been seeing the RSI making higher highs and higher lows over the past couple of weeks, pretty much all of March, as Roku itself, the stock, has been making lower lows and lower highs. So we're seeing that shift. RSI is creeping up. We're seeing that bullish divergence. This could signal strength in terms of the move. Roku is, slowly starting to build here. There's strength in the move upward, so that's a good sign. So I'm going to wait probably till about 370, 375. I want to see if Roku could end up breaking out of there. If so, we could be seeing a breakout overall in the stock. And the next one here I'm looking at is J&J, also known as Johnson & Johnson, and this is one that they report earnings on the 20th of this month, so I'm excited about that. And we're also breaking out of the overall wedge on the 4-hour chart here, and the 50 and the 180 moving averages, and we actually called that breakout a couple videos ago. If you guys caught that, let me know in the comments. And at this point, we're selling off a bit. We're down about $3 from that recent peak, down about 2% from there, and we're approaching the 50 and the 180 moving averages again. So I think the uptrend will hold. I think we will hold the low 60s here, or 160s rather, and from there we'll probably be able to see a bounce back up to the high 160s. So watch out for J&J. Overall, the trend on the 4-hour chart is looking pretty attractive. Upwork is another one that's moving pretty nicely today, up 5%. We are breaking out of the neckline of the head and shoulder here on the 4-hour chart. And if you guys were in the Patreon group, if you're a top tier patron, you know that I called this out this morning. It's up 5% today, which is great. And we're noticing an inverse head and shoulder over the past couple of days. I mean, if I quickly just clear this drawing set, you guys can see exactly what I'm talking about. Look at this. Left shoulder right here. We have the head right here. And then we have the right shoulder right here. So I think we're going to see some upside on UPWK, probably up to about $50, $51 in the very short term here. So I'm watching out for that. And CHPT, Charge Point, did very well today, and I'm super happy about this one. I've been buying this on the dip over the past couple of months. And the most recent buy I had, which doesn't always happen, for the most part, it doesn't happen, you timing the bottom, right? But the most recent buy I bought at $20, I timed the bottom perfectly. I mean, we didn't get much under $20 there, and now we're sitting nicely over $30. Today we're up 10%. So Charge Point is cruising along. The infrastructure bill that Biden's putting through, that's doing wonders for this particular company, right? And a lot of the other EVs in the space as well. And now that we're up 10% today, we're clearly breaking out of the 180 moving average here on the 4-hour chart. And this leads me to believe we're on a one-stop shop to $35, which was the big resistance stemming from December all the way till the end of February. So that's the next big gap to fill. And quite honestly, if I'm being real with you guys, I think 35 is going to break, and we're probably going to be seeing anywhere from $38 to $40, $42 at some point. I don't want to put a time limit on that because I don't want you guys to go out and buy options based on what I'm saying. Oh, it's going to go to this level in 2 weeks, because the truth is I don't know when it's going to get there, but we're seeing the RSIs kicking up. We're seeing volume kick up as well. Momentum is shifting. So CHPT in the short term, it could go, it could move, and again, anywhere from 35, 40, I think it's going to be going there. And Chewy is another one which has been range bound for quite some time now, and it's more towards the bottom of this range. Take a look at this on the 20-day chart. You can see Chewy's been trading between 77 as support, 88 as resistance. After they reported earnings, it did momentarily go to the mid-90s, but obviously that didn't last. Now we're back down to the lower 80s. So I think Charge Point, or my mind's still on Charge Point, guys. I think Chewy could end up going to about 87, 88 in the very short term. That is where it was back in what was this? The end of March, middle of March, and that gives it about 7% upside from here. And obviously, if 88 breaks, I believe we could be going to about $94. That's where we were after earnings were reported. And on the 4-hour chart, you guys can see if it gets out of this dang range, which it's been struggling for over a month, or about a month at this point, I think we're going to see a nice pop to the hundreds, but we're just not there yet, so we have to be patient with Chewy. And the last one for today, which I also own a position in, both a swing and a long-term position, this is Tattooed Chef, and this one is at a very critical spot, guys. I mean, this one is so close to breaking out. It's squeezing deeper and deeper into this wedge, making higher lows and lower highs at the same time. We're trading right under the 180 moving average, which has been resistance for almost 2 months on this particular stock. So I think if we could break $21, if you guys are looking at this as a swing trade and not a long-term investment, which again, I'm in it for both of those, right? Both of those strategies, you're going to want to look at it as, okay, if it breaks 21 from a swing trader's perspective, if it breaks $21, gets into 21.50, 22, that is where momentum's going to shift. And likely over the next couple weeks, months, I could see if that happens, mind you, I can see Tattooed Chef get anywhere from $25 to $27 per share. So that is what I'm watching right now, guys. Those are a bunch of stocks. My thoughts on the markets. We talked about the S&P, Dow, NASDAQ, little bit of the VIX here. So what do you think? Let me know down below in the comments. Make sure to smash that like button if you guys enjoyed the video, and feel free to also subscribe to the channel if you want to be a part of the family and join the StrivesMart Discord chat. You might as well get $30 from M1 Finance by using my link and opening up an account, and you guys could also get 2 stocks from WeBull by also using my link, depositing $100. That's how you get 2 stocks. All of those are linked down below. Same with my Patreon. If you guys want real-time buy and sell alerts, real-time call-outs, morning update videos every single day, and if you guys want more access to me via DM, that is on Patreon, link down below. So I'll catch you all in the next video. Thanks for watching. As always, keep crushing the markets, guys. Stay safe out there. Peace out.